And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show. And as always, this is the show where we bring you where the action is in the broader markets. And we are seeing the markets continue to progress. The S&P 500 quite close to hitting a new high. We will get into that and a whole lot more. First up, taking a look at some of the headline news last week. We did see interest rates remain elevated. They're flat. We'll take a look at that. Also, initial jobless claims jumped to their highest level in 9 months, and that gave the markets a boost, certainly into yesterday, into today. Next week, we need to be aware. Core CPI and PPI data will be released. Closely watched inflation metrics, and it's going to be all about how those numbers come out, how interest rates respond, and of course, then the markets. Also on the global front, there was news last week that the Eurozone economy did emerge out of a recession. I talked about it in my MEM Edge report on Sunday. And then subsequent to that, we did have a major global monetary oversight fund increase the outlook for global growth. And that will impact what I am going to share with you today as far as group rotation and what really is shaping up in the markets right now. So let's go ahead and get started. Take a look at how we closed for the week. And here we are with a daily chart of the S&P 500, a nice 1.8% advance last week. You can see that we are inching closer to this prior high. We're less than 1% away. And relative to those momentum metrics, the RSI is in positive territory, heading north. Likewise, with that moving average convergence divergence, that MACD in positive territory, also heading upward. We are above key moving averages, which can act as resistance, but we are above that. So the S&P 500 is in a confirmed uptrend. Now, let's take a look at the Nasdaq. Up not quite as much, 1.1%. However, net, we are above those moving averages, a positive RSI. And I have this faster moving momentum indicator stochastics on here. And that also is in positive territory. So we are in an uptrend with both of these broader markets. As we move through, let's go ahead and take a look at this comparative chart. Very easy to set up in Stockcharts.com. And what I am sharing with you is a view of the Dow. That's this darker blue index, and the Dow was up over 2%. It has advanced more sharply than the other broader market indices over the last 2 weeks. So we will get into what is driving that price action in the Dow as we move through today's show. From here, let's take a look at those underlying sectors in the S&P 500. These are those 11 various areas of the broader markets. We're looking at a 2-month daily price chart view, and it's sorted by a relative strength indicator. This is all about getting your arms around sector rotation that may be taking place. Quite simply, your stronger relative performing sectors are going to be up here in this upper left quartile, weaker down in the lower right. So first up, taking a look at these areas at the forefront, utilities up again 4%. And there are very sound reasons for this sector advancing. Let's go ahead and take a look at a longer term chart. This is something I shared with my MEM Edge report subscribers a couple of weeks ago as we began to review and really open up our exposure to some of these utility stocks on the move. So this is a monthly chart. You can see that we are in the throes of potentially breaking out of a 2-year base. This MACD just now having that upline, black line through the red, and we have a positive RSI, all pointing to further upside. The longer your base prior to that breakout, historically, the longer your advance out of that. So take a look at those utility names because a lot of the price movement has to do with 2 factors. One is tremendous increase in the demand for electricity, a lot of it driven by those data centers. They're anticipating very big growth into 2030. And then water supply and demand. There is a lot by way of demand in a reduced water environment. So 2 areas there. Also, staples here continue to being up here at the forefront. A number of major names in that staples space are coming out with good numbers, and they're being cited as inflation-proof companies. That's up here. Also, financials. Bank stocks fared well. We're going to take a look at that group. It did outperform the markets just a bit, but here we are with XLF, and you can see this nice double bottom formation, financials heading higher. Of interest to me is this MACD just entering into positive territory. And certainly, while bank names are compelling, their investment management is an area that I'll be focusing on over the weekend. So up here at this forefront, XLI, and this is the industrial sector. I talked about that move as far as global recessions receding and global growth coming into place. And the industrial is one of those sectors that really is benefiting. And we can see this nice base breakout shaping up again with that black line up through the red, MACD crossover and RSI. So this is another area of focus for me as far as looking at areas of possible growth. Now, for me, historically, with my background with William O'Neill and Company and working with very closely with a lot of growth fund managers over the year, when I look at growth stocks, I'm going to be normally more focused on really high growth areas such as consumer discretionary, but take a look. Discretionary stocks were at the bottom as it relates to performance again this week. That area is struggling. And then also I tend to be more focused on technology, but let's take a look at that technology sector. It's really languishing here, rather flat for the week. So I will follow that growth and lean more into these industrials and other more cyclical areas of the market that are going to benefit from this global growth. So as we mentioned here, down in this quartile are weaker areas. We looked at consumer discretionary. Let's take a look at energy. Now, it did end the week fairly strong, finding support at this upward trending 50-day simple moving average, but definitely a relative outperformer of late. At the end of today's show, I will share with you an energy name that is AI related. So you'll want to stick around for that. And then also taking a look at some of these areas in this middle. While healthcare is sitting here, it was in that lower right quartile. We are seeing a bit of strength this week, up 2%, back up above that 50-day simple moving average with that MACD just entering positive territory. Likewise with that RSI, and a lot of that having to do with a group that I will share with you as we move through. In fact, let's go ahead because I want to share with you the underlying growth and take a look beneath the surface. You really want to have a very good sense of what's taking place beyond those broader sectors. So I'm sharing with you a view of ETFs that I find very helpful as far as staying on top of the markets. Again, 2-month daily price chart view with that RSI sort. And up here at the forefront, here we are with banks. You can see that they are trending further above these moving averages. We had that nice bullish shorter term 10-day moving average moving up above the 50. That's a golden cross formation. And then we have the momentum indicators in positive territory. Now, I will say you will need to be selective, and it is a very large group, but by and large, it is trending higher. Let's take a look at another area that fared well last week. This is housing stocks, really faring quite nicely, up 2%, despite the fact that interest rates are remaining elevated. Take a look at this MACD crossover right up into bullish territory. And this is an area that I've talked about in the past. You do need to be selective. There are luxury home builders, those that cater to first-time home buyers, and oftentimes simply purchasing the ETF can be a good way to participate. And then moving through, taking a look at some of these other areas, I talked about healthcare faring well. And it's not going to be a great looking chart, but here we are with medical devices firming up nicely. There were a couple of large cap names in that area that fared well last week. And then when talking about global growth and cyclical stocks such as industrials and basic materials, let's take a look at semiconductors as they are just trying to really firm up and have a sound close above this key 50-day simple moving average sitting here at 219.7. We closed at 220. So that certainly would count. We are seeing that MACD move up into positive territory, likewise with that RSI. But again, this is an area where you do need to be highly selective. There was news last week. We're going to take a look at TSM, and I'll share with you their news and how that's going to impact some of these semiconductors and other technology areas. Let's take a quick look here at Brent crude oil. We did see the price drop dramatically. That was last week due to high inventory, and we did not regain that drop. So we are still sitting down here in those low $80 level. But again, I will share with you an energy name that is not going to be impacted by the price of oil, but rather other factors. And I did see a question last week, and I want to thank everyone who hit that like button if you like what you're seeing. Also, be sure and leave a comment or any of your questions. And one of the questions last week centered around two stocks that I highlighted as looking very constructive going into the release of their earnings. And the question was there anything on that chart that would have told you that they did not trade higher in the throes of potentially reversing your downtrend? And this is BLDR. One thing I did want to highlight is in last week's show, I did cite that you would be good to put this on your watch list. As a rule, I do not advise, nor do I, buy stocks going into the release of their earnings. This risk is too great. And particularly this earnings season, we've seen quite a bit in the way of large drops and large gains. But net, you don't want to take that risk. But let's take a look at this chart, because going into this earnings report, the stock closed higher above that key 50-day simple moving average, that RSI advanced further. And then likewise, we did have that MACD crossover. So in essence, the chart was giving a green light. So the answer to that question was no, that you would not have had advance notice of this possibility going into the earnings release simply using the chart. But what I did want to do from here is share with you what a drop similar to this and what a recovery process looks like, and what you will be on the lookout for if, in fact, you did participate in BLDR, or really any number of other names that have really been hit hard this earnings season. So what we're going to take a look at here is Meta Platforms. They did, of course, come out with their earnings recently. And here we are with that significant drop and on heavy volume, similar to BLDR, which in turn pushed this MACD down into negative territory. So using the daily chart, a couple of factors you're going to want to be on the lookout for is an advance that continues above that 10-day, then above that 21-day. Ideally, ultimately, we want to get that stock back above that 50-day to confirm that it is back in an uptrend. We do have a positive RSI and a nice bullish MACD crossover. Now, since BLDR is much earlier in its advance, I'm going to take us down to an intraday 1 hour price chart. For those of you that are more active traders, perhaps you're very familiar with this view, but I use a 5 and 13 hour simple moving average. And this is again Meta. Here's that drop on earnings, and the stock advanced rather slowly over the next several days, paused, and then once we did get back into positive territory with that MACD up here above that net neutral, you are in much better standing as far as the possibility of that stock recovering. And what we're on the lookout for eventually is a closure of this gap in price. And as I noted on that daily, a move back above that 50-day. So from here, let's go ahead and take a look. I talked about XLI and its advance and looking quite constructive relative to other areas of the broader markets, and the fact that there is growth taking place. So from here, let's go ahead and take a look at this sector summary view. We're going to go ahead into that industrial sector. And from here, we can then simply sort it by this Stockcharts technical rating. That's going to give you these stronger areas up here at the forefront and into these areas that are not really participating. So for my work, I do want to take us into some of these diversified industrials. And from here, again, you can go ahead and use that Stockcharts technical rating. Now, a lot of these names have already experienced advances. I showed you that chart with industrials. So that means that Stockcharts technical rating will be quite a bit higher. Let's go ahead and take a quick look and highlight an example of a company that has fared quite well, but it is still looking constructive. This is HWM, and this is Howmet Aerospace. And I did want to point out with this particular name, they did have that gap up upon the release of their earnings into this nice uptrend. Now, we are certainly overbought at this point in time, but this fits that mold as far as companies that are in the aircraft space, and it's an area that is experienced as far as providing aircraft parts. There are a number of names. My MEM Edge report does have another winning name on that suggested holdings list in this area. But let's go ahead back to this list, because what we can do from here is take a look at names that are not as advanced in that Stockcharts technical rating so that they might not be as far overbought. So here we are with Emerson Electric, and the stock did come out with their earnings and they posted an outside bullish candle. And by that, I mean the stock did have a point in time where it was below the low of the prior day, but it closed well above the prior high. Also, it took place on high volume, and you can see a subsequent gap up into a base breakout. We have that MACD black line up through the red, just entering into positive territory. RSI not quite in overbought position just yet. So really highlighting how you can uncover these names once you have a good reason for a particular part of the markets continuing to trade higher. I talked about semiconductors. Let's take a quick look at Taiwan Semi. And the company already did come out with their earnings, but the reason today they had a 4.5% gap up into a base breakout is because they released their April sales data. And in that sales data, the company did announce that their sales of AI-related chips surged over April. So in turn, we can see that gap up into a base breakout, nice bullish characteristics here. But of note is the fact that when you are looking at these semiconductor stocks, you're looking for contenders, you will want to make sure that they are AI related. Now, here's a name that is late to the AI party, AMD, which has been a winner in the past, but you can see it's just not able to participate and get back up above resistance, quite simply because they are not in that leadership area of semiconductors. Now, from here, I did also want to share with you that energy stock, and this is going to be a company that is in the pipeline industry space. Take a look at ENB, and the stock. What you can do with Stockcharts.com quite simply is ask for a full quote. And what you will get is not only the company name and market cap, but you will also get the industry group. They are a pipeline stock. In other words, they do offer pipeline services for oil and gas. And also of note here is the stock has a 7.2% yield. And we can see that it is already advancing. I'm going to go ahead and pull up a weekly chart of ENB, and you will see that it had a base breakout of a long nature this week. Take a look at this high volume. Now, the company on this advance, they did very recently report their earnings. And among the news, the company is on the lookout for advanced and increased usage of their pipeline for AI reasons. And it's all about using natural gas to provide the power for these data centers. And we have now an AI-related stock. that is in the energy space and has a nice 7% yield. So let's take a look at the chart from here because you're certainly not early. I'm going to add a 5-day simple moving average. And again, this would be a good name for your watch list because at this point in time, we are well advanced above that 5-day, which is sitting here at 37. So we're about at 38. And what you will be on the lookout for as this stock is just entering into an overbought position, look for a pullback to that 5-day around that $37. You don't want to chase a name. And then you will want to use this November advance as precedence. And you can see when we get up above that 5-day, pullbacks to that moving average can in fact be an ideal buy point. And one last area I did want to share with you. We talked about how the Dow has been outperforming the other broader market indices. So let's go ahead and take a look at those underlying stocks in the Dow Jones Industrial Average. And at first glance, what I'm sharing with you is a view that quite simply gives you the performance over any given time period. So daily, over the last 5 days, you can sort that. And then over the last 1 month, which is the sort that I have now in place, we're going to take a look at a different view as well. But what we can see up here at the forefront are these financials and Goldman Sachs, AXP. Each of these companies have reported earnings over the last 4 weeks. We talked about Staples, KO, and Procter & Gamble are the two big winners in that Staples space, and both came out with good numbers. 3M, and so on. But you can also sort it in any other fashion that you desire. From here, I'm going to go ahead and share a candle glance view with that RSI, that relative strength indicator, to provide you with a different view of these stocks. And again, here at the forefront, Goldman, Coke, we did see them as being big movers over the last 4 weeks. But let's take a look at Raytheon. This is a name that is in the industrial sector. And I did want to point out as well, they are in that aerospace area. And I'm going to go ahead and mark up this chart because it is quite compelling to me as it relates to how this stock trades and the position it's in now. So we can see that RTX had very flat performance for most of the month of April. And this is during a period when the broader markets pulled back. So when you see a stock that is holding up better than the broader markets, you will want to pay attention. And then this week, we had a nice base breakout of that flat period of consolidation. A couple of other things I'm going to point out here. And then also we have that black line up through the red with that MACD crossover into a new uptrend. We are a bit in an overbought position. When you see that, you can simply take a look historically and see that the stock does have that capability to advance and move higher into an overbought position, but still have nice gains. Let's go ahead back to this list and take a look at some of these others because I talked about 3M having an upgrade this week. You can see this pull back to that 10-day and then today's gap up on nice volume. And then also we're going to take a quick look down at these areas that are underperforming. Make sure that you're not involved. I talked about consumer discretionary not faring so well of late. And here we are with Nike continuing to decline after reporting weak earnings at the end of last year. And then also up here, Home Depot, another bellwether retailer, is suffering. You can see that it did pull back all the way down to that 200-day simple moving average. This is on my watch list because we are beginning to see signs of turning. And these retailers are the last by way of reporting their earnings. So I'm on the lookout for a potential reversal similar to this October into November period. And that's it for this week, everyone. Have a fantastic weekend. Go ahead and hit that like button if you like what you've seen. And be sure and use that link below to trial my twice weekly MEM Edge report for a very nominal fee. See you next Friday.